And good afternoon. You're watching Business World Live. I'm Jes Delos Santos. Let's take a look at how the local bourse closed today, Tuesday. A last-minute rally propelling shares higher this Tuesday. The index climbed by 1.2% to 7,044 on the back of recommendation from NEDA Secretary Carl Kendrick Chua to actually place the entire country, especially the National Capital Region, under modified general community quarantine come March 1. He says this is to address hunger rate among Filipinos. He says the proposal is backed by the IATF, but that, of course, has yet to be signed by President Duterte. That includes, the proposal at least includes increasing seating capacity in public transportation, loosening age restrictions, and allowing inter-province bus operations. That's something, of course, that we are going to discuss more of later with our guest, economics professor Emmanuel Leyco, is also the president of the Pamantasan ng Lungsod ng Maynila. Now, looking at our sectors here, all gauges in the green here after, of course, local shares rallied. That's headed by the property counter, which is up by 1.8%, followed as well by industrials and holding firms here, with holding firms up by 1.5% here. Industrials likewise also edging higher here, close to 8%. That's despite, of course, remittance dropping full year by 0.8%, the first time since 2001. Money from OFWs, of course, OFWs rather, of course, being a driver in consumption and real estate purchases. Speaking of which, SM Prime, one of the top gainers here for today, higher by 3.4%. At the same time, you have the likes of DMCI and Megaworld also in the positive territory here, with Megaworld inching higher by 2.4%. DMCI likewise also on the upside here, adding 2.4%. Some consumer stocks also in the green, the likes of Alliance Global, which ended the day with a 3.1% gain, as well as URC, which you can see right here, has a gain close to 2%. But not the same storyline here for one other consumer stock. I'm referring to Jollibee. As you can see, one of our worst performers for the day, that ended the day close to 0.3%. The food chain entered a 50-50 joint venture with Japanese resto chain Yoshinoya for expansion here in the Philippines. Yoshinoya now adding to a growing list of Jollibee franchises, which include, of course, the likes of Burger King. JFC says don't expect Yoshinoya to significantly chip in just yet in their sales, but says opportunity to actually bump up sales is there, given the demand for deliveries, especially this time around. The JB has a capital of 130 million pesos with a goal of opening 50 stores in the long term. Jollibee, though, shedding points. The stock is now priced at 179 apiece. Meanwhile, Manila Water on a trading halt today. That's after Ayala Corporation, in a disclosure, said that its unit, Phil Water, agreed to sell 2.96 billion of its Manila Water preferred shares to Enrique Razon's Trident Water. Now, each share is priced at 1 peso and 80 centavos, totaling 4.8 billion pesos. That acquisition is tantamount to 39.09% voting stake and 8.19% economic stake in Manila Water. Razon, of course, moving closer to taking control of the water utility. As you can see right here, both Ayala and ICTSI ending the day with gains here, with Ayala up by as much as 1.3%, now pricing at 793 centavos a piece. Likewise, ICTSI also on the positive territory here, now priced at 122 pesos and 40 centavos a share. Now, here are other headlines we're keeping our eyes on. The Philippines has invited India to invest in its tech sector, with the finance department noting a potential industrial park in Batangas for Indian companies. Finance Secretary Sonny Dominguez said Indian investors are being invited to tap Philippine workforce in line with recent trade agreements in the region. Dominguez says there are opportunities present to make Philippines India's ASEAN regional base. India's ambassador to the Philippines, Shambhu Kumaran, has expressed interest in helping the Philippines with digitalization. The Finance Department also said India is willing to fund the establishment of small IT centers in Philippine schools and universities. Now, experts note rising demand for smart and interconnected properties and communities as more people shift to flexible working setups. Globe Telecom's strategic property segment said real estate and telecommunication firms should work together and use digital connectivity as leverage to differentiate themselves from the market. Colliers International Philippines also said their recommendation for buyers is to look for projects that are adaptable to the work from home scheme. A report by online real estate marketplace Lamudi also noted that apartments saw the fastest growth in 2020 as more people seek affordable housing solutions near their workplace or as investment opportunities. The Lamudi report said the property sector may be on its way to a recovery as economic factors and investor attitudes improve. Now, circling back to our top story, is now the best time to ease restrictions in the country, particularly in NCR. To get his insights, we have economics professor, Professor Emmanuel Leyco, also president of the Pamantasan ng Lungsod ng Maynila. Good afternoon, Prof. Leyco. Nice that you could join us once again here on the show.
Good afternoon. Glad to be back here.
All right. You have, of course, a NEDA Acting Secretary Carl Kendrick Chua proposing that the entire country be placed under MGCQ starting March 1, particularly in NCR. Should this happen, how much would this inject into the economy, sir?
I think definitely they're talking about trillion pesos getting lost in the economy, and the president saying that we are losing 2 billion pesos a day. I think that's a lie. However, I think this is where economics and science should meet. We cannot say that for the sake of the economy, we should ignore science. And for the sake of science, we should ignore the economy. I think this is something where the strongest argument for science in our attempt, in our initiative to control COVID-19 should play in. But at the same time, we cannot ignore the economic implications of a prolonged quarantine. But then, can you just stop the quarantine just because we are economically hurting? I think that will hurt more.
Now, given that, sir, the move is already facing some opposition here. What would be the impact should restrictions remain under GCQ, or at least should restrictions not be eased? Can you give us ideas, figures here as to what could that what are the possible economic repercussions there?
Well, if you're just to follow what the government is saying, the government data, we are losing jobs. We have lost thousands of jobs, if not millions, and the president already said we are losing 2 billion pesos a day. And I think if that continues, that will really drag not just economies of the NCR, but economies of the whole country. And as it has already. Remember, almost 50% of our economy is being driven in the NCR and the nearby regions. So I can understand that there will be a major repercussion economically, financially, and serious indications on the lives of our people. And therefore, the imperative is for our economic planners to come in, open the economy. However, I think you cannot just close our eyes on what science tells us. Virus is still very much around. The vaccine, while it is already in sight, it has not even rolled out. I think only PGH was able to roll out, but only on a very limited basis. I think in terms of the rollout of the vaccine and the opening of the economy, those two will have to go in tandem.
No, but would you say, sir, that it has to happen on a nationwide level, or would you say geographically we have to select areas in which restrictions should be eased, or maybe select some sectors that should somehow be opened more?
Yes, I think there should be some opening, and there should be selectively opened. In fact, even here in the National Capital Region, we can already open some of the areas where COVID-19 is not that high, because we can already tell some of the barangays in the National Capital Region already have zero COVID cases. However, our economy is so intertwined that a worker from a certain barangay that doesn't have COVID will have to cross through other barangays, or will have to sit beside somebody from another barangay who might have already contracted COVID. So it's going to be a very, very close call on the part of the government, which barangays, which cities, which areas to open. But I think here also is transportation. If we cannot provide adequate transportation to the people, while we are observing social distancing, we can transport people from one barangay to another, I don't think we can still open up.
But would you say that there are any sectors in particular that will greatly benefit from the easing of restrictions, or at least those in dire need of easing?
Well, I think the industries will have to be our priority, because the industries will have higher value impact on our economy. Services are the more visible, because a lot of our people work in the service sector. However, the service sector is the most vulnerable in the spread of COVID. But in terms of high value impact, I think manufacturing will have to open soon. And I think the social distancing, the minimum health protocols in our workplace will have to be observed. Unfortunately, COVID has exposed the weaknesses of the current economic infrastructure. We are too service oriented. We are too dependent on our consumption. We are too dependent on the remittances, such that the local economic base has been neglected. And I think this should be a lesson for us moving forward. Uh, I think in terms of opening our economy, let's go to the sectors where it will create higher value impact for the people.
Okay, now, like what you mentioned earlier, this easing restrictions should go hand in hand with the government's vaccine drive. But you have vaccine czar Carlito Galvez saying they are a bit hard pressed to actually reach their first quarter target. Will this not, in a way, offset confidence in easing restrictions? And at the same time, much of the move to actually ease restriction hinges on the hope that it would somehow boost public consumption. So will that, in a way, affect as well the public's confidence to actually spend?
Well, it already has. Remember, there is so much vaccine hesitancy going on right now. And then now that the people are saying the vaccines are not yet forthcoming, that there are a number of issues that have hampered the arrival of our vaccine, that doesn't help. I think we have to be more efficient and more effective and be more reassuring to our people. Vaccine is something that is being considered as the magic bullet. Of course, it is not. But a lot of people are relying on the arrival of the vaccine to boost their confidence. It's not helping that we are hearing problems with the arrival of the vaccine. But then once it arrives, we can expect more problems. We need to see roll out procedures, roll out mechanisms that are in place. I am glad that many of our local government units are already simulating the arrival. They have already systems put in place. But then once it comes, I think that will be the test. will all these mechanisms that we have put in place going to work? And I think we can expect that there will be some glitches. The important thing is we have to be good at learning, we have to watch out, and we have to be honest. When there are glitches, let's consider other options.
All right, of course, we're all on that wait and see mode for vaccines to actually arrive. And again, lots of challenges yet to be faced once that happens. Thank you very much for your time this afternoon, Professor Emmanuel Leyco, President of the Pamantasan ng Lungsod ng Maynila.
Thank you very much. Good afternoon.
And those are the biggest news this trading day, February 16, 2021. Catch us again tomorrow at 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Jes Delos Santos. We are One News.